Hello, hello, hello. A little earlier than planned, but rather be early than late. We got an interesting day in the market. We're going to break down a few key things for you. We're going to calculate a beautiful passive income options trade, and then we are going to break down some of the tech stocks that you absolutely need to be looking at and stay focused on because right now we are in a very pivotal time in the market. I think this is going to be very interesting. What are you thinking, my man here? What are you thinking this week? What are you reading into in this price action?
Um, it's
Let me,
obviously bullish in my opinion, but it's not as bullish as what people think. And I'll tell you why that is. There's been zero volume this week. It is completely anemic. It's like everyone on Wall Street just took the week off and they didn't let anyone else know. So all this, what was the move that this week the SPY had? Like I think it was significant. It was like is 1.5% move on zero volume. And that
yep.
1.5% move was pretty drastic on the law of the technical recovery. So that's what I'm saying. It's a lot of misleading technical triggers are like, oh, we did recover the 21-day EMA, 50-day easily, the 8-day EMA, but it wasn't with conviction because there was zero volume. And it wouldn't take much in the market to fade or potentially turn around, especially at the 5,200 for the S&P. That's a major level. And we broke it, but we broke it with zero volume. So I think it's like, it's nice. Like the price action is nice, but I'm not convinced. I don't know
Nice
about
to
you.
have, but it doesn't
Yeah.
move the needle. And I would say so. I'll get that chart going here for you visual learners. Uh, I don't like this candle, man. Don't like it one bit. Can't stand it. I feel a lot more confidence in a hammer than I do in something like this, which you can call inverted hammer, but the body's quite long. As Shai mentioned, that 520 is beyond critical. That was the range that we needed to hold back in March for that bullish continuation, which we did not, mind you. We got rejected and then we fell. I mean, we just collapsed 524 to 493 is like a $30 move in 3 weeks, $10 a week to the downside. That's no good. A second thing for those of you that are more technically minded to look at here, always just, I mean, pretend you're 5 years old and you're just looking at shapes. I think that's the easiest way to understand this. This shape started above this shape. That's a good sign, but I don't like the expression here. It's very contracted. We struggled with 508. And then that next week, which was last week's price action, we sank as low as 499, still created a higher low and a higher high. So, good. This week opened higher, pushed higher. So all things considered, I mean, I agree with Shai completely. Looks crazy good. Isn't as good as it looks. It almost makes me even more suspicious. It makes me feel a little more anxious. I would rather see something totally neutral across the board than to see kind of what I consider to be kind of like nonsense bullish conviction. I mean, it's like, yeah, that's what like if, hey, are you bullish? Yeah. That's the answer we're getting here from the market. And like ask anyone when you want a confident answer, hey, are we meeting at 2 o'clock? Yeah, I don't want that. I'm driving 45 minutes. Are we meeting or not? That's what we're getting here. Would you not agree with
I
that? I
mean,
mean,
it's exactly what's happening. And that's why I'm like, all right, great. The way I'm playing, if you guys want to know, is like, great. I'm able to now protect my portfolio with the VIX being drained to like underneath 13, knowing everything that was bearish in the market 2 weeks ago is still there. And this price action, like Oz was saying, it's kind of inflated with no substance in the middle. It's like a balloon right now with nothing in the middle. Is just air. Knowing that it won't take much for it to pivot back to retest that 200-day, which I told you guys, like, is inevitable. We're going to hit that 200-day. Right now, it's at 480, I believe. Let me double check. It's at 470. And again, I've been being a dead horse on this for weeks. I'm like, that 475 is a massive floor. And I really do think that 200 is going to catch up. And in this kind of market where it's a balloon with nothing in the middle, it won't take much to retrace and like test it and break all the technicals because the bears are just not here at all, or like the bulls aren't showing up to have this conviction. It could be because I don't know, geopolitical tension is not going anywhere, and the election is like within 6 months. Nobody knows when the election noise will start trickling in the market.
have you heard
Nobody
a word
knows.
about it? Why have I heard nothing?
Nothing. That's what scares the shit out of me too. I'm like, we haven't heard anything about the election in 6 months, and there's no volume on this move. it feels like it's a guppy behavior. Like they want to sucker in the retail to like get ultra long and then rug pull it and just punish everyone on the downside. That's my biggest worry. And because of that, I'm buying some November SPY puts as protection. Mainly it's naked puts, but mainly to take advantage of the IV. The IV is really cheap right now. The VIX and volatilities, again, like I mentioned, under 13. It was just at 20 a couple weeks ago. I think we're going to hit 20 again before the election. I think it's inevitable. And because of that, I want to protect my high risk, high beta portfolio while just limit the punishing behavior that I know what a correction could be like in the market, especially with an election type of pressure. I want to protect it. And what am I going to do? I bought a 3% position in SPY puts. Again, I did 480 strike because I really do think we're going to hit that level sometime next couple months. And if we start fading, I'm not going to sell it all at once. I'm going to sell little by little. And what am I going to do with that cash? That's going to be the way of me raising my funds, my dry powder to add to my higher conviction names, like the snowflakes, the Teslas. Like that's why I'm a long-term investor. But you got to put on those trading hats sometime on yourself, and then knowing, like, be realistic of what's happening in the market right now. And does it make sense? If it doesn't make sense, don't be a guppy and just like wait for it to punish you. Be the freaking leader. Be the first mover. If I'm wrong, fine, great. 3% position to let me sleep better at night and remove my anxiety. That's a no-brainer. Like, I'm a long-term investor. I'll profit on the long run. I'm just doing it as a quick little hedge and not like a 0 DT or a couple weeks. It's 6 months out. So like I'm fine. It's not gonna be that volatile.
Dude, all right. This is the only I would say. So let's devil's advocate here. So I love the quick aside. He's talking about the implied volatility, right? So in theory, right, that implied volatility drives up the price of those contracts. SPY trades flat, that implied volatility goes up, you make money, even if the stock doesn't go down. So just for those either newer to options. Devil's advocate here. Now, not saying this is the position that I hold, and I'm not saying this is what I think is going to happen, but also got to say that I do think there's this weird chance that we're getting strong along. I don't disagree with that in any capacity. There's this weird thing in the back of my head of like, what if we just push to 540 by June?
That's the thing. Listen, if volume comes back and we break all-time highs and we just like blow off top, I'm selling my hedges. I just don't think right now, until volume shows off and we break that all-time high, that's when like I'm not going to be a bag holder in my hedges. I fully agree with you, Os. Like if we break 520, what is it, 525? I think we need a break. If we break 525 with volume, we're going to hit the 540 eventually. I'm not going to say it's going to get there quickly. It might take there a couple weeks, but I'm not going to be holding these hedges from 525 to 540. I'm going to be very nimble with it. I see the opportunity right now in the climate of it. Next week, we have CPI. I want to be protected against that because today's sentiment report from the Michigan sentiment report was not, it's a no bueno, but the market doesn't care because there's no volume, but it was not good. Like the inflation's expectations up, sentiment's really low, worse than in a while. Not a good setup, but the market's not caring because there's no volume.
Right. And I think that for those of you that are new or whatever, volume is going to drive it all. That's and let's get back to the chart here so I can show you what we're talking about. Anytime you see a strong move, so this is a lesson I break down this is a great introductory lesson to any and all traders. Let's do a little Q&A for those of you watching us, see if you know it, and then I'll tell you the answer. But fill in the blanks. Change in volume always precedes blank. Give you a second to answer to yourself. Now here's the answer. A change in volume will always precede the change in price. That does not mean up. It does not mean down. It just means change. You can predict volatility by looking at where volume happens. And like for those using screeners, scanners, whatever, I like to start with like a 1.5x relative volume. I think that's a great place to start over a 1 week time frame. Like where can we find opportunity is, okay, where has volume increased by a 1.5x multiple over 5 days time? And if you look there, you can often find there's going to be a move that happens. Whether it's upside or downside, that's a different story. You have to read the chart, read the price action to know that. But let's see what that means when it comes to the SPY, right? Now we got to compress this a little bit. And sorry, this is madness, but we've been breaking this down every week. If you miss it, it's every Monday, guys, 5 p.m. Eastern. It's the most valuable stream you're ever going to be on your entire life. I'm confident in saying that. Crushed a number of trades, most recently in large caps. That Tesla 20% swing, we gave it to you on a platter as it pushed from 140 to, I think, 195. So you don't want to miss that. 5 p.m. Eastern, right here on Twitter and YouTube, or in the Discord. Links at the bottom of the screen if you want to join. So here's what we've got. Looking back here, right? Buy side started skipping in right here saying, hey, no, we shouldn't go lower. Sell side overwhelmed. Now here's even more selling pressure. When you see these big red boys, these big old towers standing up next to you, and you see this little bump to the upside, I personally would absolutely never trade that little dead cat bump long for a period of time. I'd maybe trade that short move, but after that, it's dead and gone, and you know that. This volume tells you that, hey, this move does not have strength. If sell side volume is extremely high, but buy side price is up, you should be very concerned. Now, here's why the situation right now is so weird. Buy side pricing is good. Sell side volume isn't, I would say it's not like in your face, but neither is the buy side. So it's like we have one of those indicators that's good. We don't have the other one, which is a key component. That's a problem. I will say this. You look right here over those couple weeks, you're talking beginning of April through the third week of April, sellers have been in control. I mean, in reality, sellers have been in control since September. Buyers have not been in control. Price has gone up, but there have been more sellers in the market than buyers. That should concern you because, again, this all follows trends, and you have to be where the money is. We are never going to be the money that dictates the market. We follow the dictated market by the money. We take advantage of those moves. Work within the rules of the game. You will always make money. It's just a guarantee. You know what I'm saying? And like, that's what makes me really nervous about this is like we get a little, double top, boom, boom, blow off and gone. It's on the table because everyone's going to be watching that 520 break going, oh my God, it's happening. Look. It's happening, but that's not the break I'm concerned with. That would be a positive step in the right direction. But what I want to see more than anything else is I want to see 524 get absolutely obliterated. That's when I say, hey, we're going 540 by June. Let's go long calls and let's make some money on this ride. Then what happens? I don't know, because you can see we lost the key trend here that was really catered to upside. It was happening right here. We lost it in the beginning of April. So that's gone. That's it. Here's our ascending resistance that we need to be very mindful of. There's still upside here. 540 to 570 by June, it's possible. Or July, excuse me, it's possible. But again, until we get that volume inflow here, we need to be, I'm going to put up the SPX chart just because this is getting out of control with all these trend lines and all that. I don't want people getting a muddled view. It just looks like madness. And then you use simple indicators like StockSbuddy. So StockSbuddy went bullish, calculating stop loss below 497. I would agree with that, right? But again, these signals and indications are only as good as the volume they ride in on. So when you get a hard conviction buy signal and it's followed by like a big boy like this, one of these big old candles. So you're talking this week was 14 billion in trading volume. If we see north of 14, 15 billion trading volume and we're buy side, boom, gone, done. I'm in, I'm long 440, and we're going to make a ton of money on the ride up. But short of that, I don't know. Spooky.
No, I mean, let me demystify everything that we're saying, even like more simple. If you guys are a college athlete, you make a nice play on the court. What's the first thing you do? You don't run back. You look at the coach, see confirmation. Are they satisfied as well? Oh, Austin just got off. But yeah, that's exactly what you do. You just stay. The confirmation is the main thing that we're talking about right now, where we want to see this price action, which is obviously going up and up and up, but it's not getting confirmed by the volume. And that's only, we're just picking holes right now. But again, all sentiment is always driven by volume and price action. And we only have one half of that equation. So because of that, I'm not as bullish as I would want to be. And that's not a big deal. So let me hit up Austin to see what he's up. But besides that, let's talk about specific. I can go over some specific charts while he's out of here.
Sorry, I had to pee all morning. I just had to go pee really fast. I thought you were about to pop off on the coaching analogy, so I was like, "Oh, I got 2 minutes."
Oh shit! No worries, no worries. Let me remove. Coaching, yeah. So it's confirmation. That's all Austin and I are talking about. It's just confirmation.
Yeah.
So
What chart? Is there a chart you want to pull up?
I was going to, but it's probably easier on yours. All right, let's talk about some micro then, since we can't really talk about macro markets because anything we talk about is just fluff right now because there's no volume to back it up. So now that we flagged that, let's wait to see if there's any kind of confirmation via volume, which again, you guys don't have to track. Just tune in on Mondays and Fridays, and Austin and I will confirm with you. Volume is back in the markets, and price action.
We'll do all the work.
We'll do all the work,
and
we'll
do it
confirm
anyway.
with you guys.
We're just doing it in front of you.
Green lights, but right now, small caps have been struggling a bit this week, or not even small, high beta names like the risk on names are struggling a bit, not catching a bid. All the price action is from the Mag 7, business as usual, like the first 6 months of the rally, like from October to March.
Yep.
It's just everyone is flocking towards these big tech companies. You know why? It's because they're the leaders of these secular growth themes, and they also have a stupid amount of cash. So there's a level of safety now in those names. But we're not going to go over just invest in the big Max 7 name because that's not the edge that we're offering to you. We're offering like what's some high beta names showing clear strength. And one name that we introduced to you guys a couple weeks ago that nearly doubled is Transmedics. So if you can hear, you want to bring up the TMDX?
Yeah, I'll bring that up right now. TMDX.
This
unbelievable. My god,
it's just nonstop, and it's not. It's that kind of move in a month, and there's zero fade or profit taking. That there's no clear sign. That's confirmation. This is a perfect example of confirmation via price action. You see it blow off top. Volume has stayed the same, and actually, you can make the arguments accumulating right now.
Yeah, look at all these on the bottom here. Like, just again, guys, be a third grader and look at this as shapes and just measure the size of the shapes. You don't have to understand every little intricacy. It's like bigger green shape, bigger than red shape. Good. It's good. It's how simple this has to be. I think like if you take the caveman approach, you'd be very good at this. Like the best traders I've ever met, and honestly, the best investors are like Warren Buffett offers a methodology that is quite simple. Good company, I understand. Quality management, good cash flow. Done and done. It's not a huge thing. You know what I mean? But like this is he nailed it. So look, like this move was coming when this was trading at $20. Smart money was just loading, extra loading. They're like undervalued. This is stupid. You guys are idiots. Who's doing this? You're dumb. Thank you for the free money. And then the move happened. So like this kind of volume candle with this kind of breadth, I mean, you're talking 39 to 69. I mean, you're talking almost 100% move over the course of a week, and it sustained more than 50%. That's another like simple strategy I'd say is really easy to deploy for anyone that's new. If it moves 100% in a week and you look at that candle and the candle closes at least above the halfway point, there's a higher likelihood that move will continue than it is that it won't. Again, just shapes. Like, does it look like it's higher than half? Okay, cool. It does. Great. And then boom.
So again, like what I've always tracked Transmedics for multiple years. I just never saw the inflection point I wanted until they acquired the aviation company Q2 of last year. And then like what Oz showed, I was like, oh shit, the volume spike. And I noticed the accumulation with the inflection of the fundamentals. I'm like, I have to start a position. So it's a top 4 position in my growth portfolio now, but my average cost basis is in the 40s. That's when you got to find these kind of names before everyone else knows about it. Because guess what? If you go on Twitter right now, so many people are talking about Transmedics all of a sudden. Nobody was
suddenly.
Yeah, suddenly, because the chart is too impossible to ignore, especially in this kind of macro environment where small caps aren't really running, but clearly Transmedics is. So now everyone's like jumping on board. I'm not saying it's too late, but I think the easy money has been made. I still think it's going to hit $200 sometime next 12 months, but it's not going to be a 4-bagger next year.
Yeah,
that's what it turned in for me. But I do have another name that I do think is the next Transmedics. I was loading the boat under $5. And I'm sure you guys all heard of this name, and he probably counted it to extinction or just doesn't exist anymore. But the name is Jumia, ticker JMIA.
Ooh.
3 quarters ago, I'll tell you a little about Jumia. You guys might have heard them about. They're the Amazon of Africa, like during the big 2021 bubble. They ballooned up to like what, $60. They weren't ready to be at $60. Yes, they're the only e-commerce presence in Africa, but they were nowhere close to belonging in 60. Guess what? Last summer, they got a new CEO, Q1 of last year. Then last summer, I started seeing their cash burn getting reduced significantly quarter after quarter. I was like, wait.
That is the cleanest double bottom. Like, that's just a juicy booty right there. That's all that is. That's a clean double bottom.
Here's the crazy part though about Jumia is just like I mentioned, it was getting priced to extinction. Solvency risk 90% is probably gonna go to zero. No way they can turn profitability at all. It's gonna be a dud. That's just everyone priced it to that. Quarter after quarter throughout 2023, I was like, holy shit, they're cutting their cash burn by like 50% quarter after quarter. I was like, the market's still pricing it to extinction. I think the solvency risk got cut in half. So I started adding. Guess what they just did last week?
What?
They were profitable. Operational margins were profitable. CEO just said they don't need to raise cash. They can fund their own business from here on out.
Oh, so no dilution.
No dilution, and solvency risk is zero. And I think it's gone up 40% in the past week or so.
They stated that? Like, they stated solvency risk now zero?
I'm reading between the lines, but he said we don't need to raise funds and we can fund ourselves from here on out. He has never said that in all the years I've been monitoring it. He's been very back pocket. And the thing about Jumia, no institutional support at all. No analyst is covering it. That's going to change now that they turned a profitable quarter and they're the only e-commerce presence in Africa. That's a completely different story. Game over, in my opinion, for analyst coverage. Like, now, I think a lot of institutions were waiting for that inflection quarter of like, wow, they don't need to dilute, and they reported a profitable quarter, which nobody thought they could at all. And they're growing top line like 20%. Their SG&A got cut 90% year over year, and they have a constant currency issue because if anyone knows about the ruby, whatever the African currency is, it's disgusting against the dollar. But guess what? They're making it work, and they made it work. It was the inflection point. And I'm not saying that there's zero risk in this name, but this doesn't belong under $10 anymore. There's 0% solvency risk, in my opinion. And from here, from $6 to 10, I think it's going to happen way quicker than people think. And once institutions start covering it, analysts start giving buy ratings, hold ratings, or whatnot, and the price targets will be $10 or higher. I wouldn't be, to be honest, like I want to freak people out, but like I wouldn't be surprised if you got some buy side coverage, buy signal for $20+ on this name, and that will cause this name just to just go crazy. And I'm stoked in this name. I doubled up my position after last week when I saw that print inflection point. I'm like, okay, I might be crazy. I saw an inflection point. I've been monitoring their cash burn and quarter after quarter, listen to every earnings call. I think we're there, and we'll see what happens. But I do think it's $1 billion company now, above $10.
So basically, what institutions were looking for was like explosive, groundbreaking news. What you're saying is, reading between the lines, kind of a silent strength, which is, I would say, much more assuring than huge news, because then it's a better opportunity for the I would say smarter investors that are going to find this early.
Well, the issue is on the earnings calls, there's no analyst asking questions. So like, he can't just publicly say.
Oh.
So that's why I'm like, he's giving information. I listen to the interviews he says on like CNBC Africa, the channel checks I'm subscribed to, seeing what he talks about. Like, I know this CEO like really well, his language and the type way he talks. This was a way different kind of tone that he's talked about last week. And like, I'm trying to like not go full on boat, like load the boat in this name, but I'm so confident it's going to hit $10. But worst case, I think the floor is in the stock. It's not going to go break $5 anymore, or even $4. Maybe there's some profit taking because if people got in at $3, they don't trust the name because of how it went from $60 to $3 within 2 years. Fine, maybe. But That's up. Like I'm just tracking the candles, tracking the volume.
Dude, they are getting beat to shit. I mean, come on. They're $3.60 price target. Morgan Stanley a cut from 11. But look at, you're right. Almost no updates in coverage for years, 2-3 years, which you'd think you would at least see some updates.
And you will now.
Raymond
it's impossible
James
to
still
ignore
has it
that.
at 36, but that was 2019. So
I'm telling you, I think I found a massive winner. A lot of people said Transmedics couldn't turn profitability after that aviation acquisition back in the 40s, and my model disagreed completely with that. And obviously, my model proved correct. My model for Jumia is a $25 price target in 2026. Like I think there's massive rooms, but again, keep in mind my 3-year models. Like for a small cap, it's usually more inflated just because of my assumptions I'm making. Small cap world, it truly is a quarter after quarter story. My model changes drastically each quarter based on whatever they produce because it's so different. But again, I love that I was trying to flag this winner for everyone.
I love that you just said that. How quickly it can change quarter over quarter, because I just want everyone to know and stay posted that there's going to be something fucking awesome coming soon in which you will be able to have those updates as they occur quarter after quarter, get to see the entire rebalancing, and you won't be out of the picture. You'll be in the know. So just stay posted for that. Make sure you join the Discord, because that's where you're going to get that information first in the next little bit now. So quick question before we wrap on this one. Geopolitical risk. Is there any? And if so, like what headwinds do they face from a geopolitical standpoint, would you say?
So the major thing was Nigeria. Nigeria was always a massive risk geopolitically for them. That's a major part of their business. They got a new PM or new leader a couple months ago. And this is the first time in, I think, 3 years where the CEO said Nigeria is stable now. Ooh. That's a lot. That was like, all right, that new leader of Nigeria, he did it. There's macro stability now in that region. I think that's a major win. It's just so crazy because I'm just a 30-year-old from in LA, and I feel like I'm the only analyst covering this like name because I'm the one that's like plugging in these holes from like what the CEO is saying, doing what all the analysts should be doing on Wall Street.
You're the guy with the board with all the strings on it.
Exactly. Yeah, 100%. I love that. I love like
I feel like quite often that guy's right.
I just love I love finding gold when nobody else is talking about it and hearing about it, because again, when I was overweight in Transmedics at 40, it was the best feeling ever. Being my conviction was validated and everyone's jumping on boat way after I did. And just see my position just keep going up and up and up. And I'm like, there's no better feeling. I've hit game winning 3-pointers in basketball. This is nothing to do. This is way better than game winning shots in basketball. Like having high conviction when nobody else is covering it and just seeing it being validated by their price action and your dollar value going higher and higher in your portfolio. So we can move on to the next one, but I just want to call the Jumia as like, this needs to be on everyone's radar. Don't start a position now. If you don't have to, it's too much risk potentially. Just watch it. And as soon as that first coverage happens from an analyst giving a buy rating, this will go up really quickly.
Yeah, 100%. I think that the opportunity is there. And I mean, again, Amazon, I mean, so look at the growth of e-com businesses, especially with that kind of footprint. I mean, it's kind of hard to ignore. And this did explode to $70. Now, again, I would agree completely that, like, was that ridiculous and not well timed? Yes. But we also know that sellers couldn't take this much lower than they have. I mean, they've tried. And that's the important thing to know here. It's like they've already tried to drive this lower. Market says, I disagree. Higher every time. So we got now our double bottom setup, which I would say this was our confirmation right here on the strong push up. Obviously, you know, as Shai said it so perfectly a long time ago, that like the fundamentals tell you what to buy, technicals tell you when to buy. He just walked you through the fundamentals. Now, from the technical standpoint, use tools like StockSavyShay to make it simple on the monthly chart, not the 15-minute, not the hour, the monthly chart, which for me, highest conviction is when I get buy signal on monthly, because we often see a pretty significant run thereafter. And on the last couple signals, I mean, you saw pretty significant upside, But so this auto calculates your stop loss below $4 is basically what this is saying. And I would tend to agree. So I like to look at previous ranges. And if you look right here, if we ignore the bottom, when we look at the top of this little segment right here, buyers really struggled with $4.30. Really struggled. What changed that allowed them to drive demand higher? That's what you need to think about. And then secondarily, remember, support, resistance, one and the same. It's just like being on an elevator, right? The first floor, the second floor is above your head, but you go up one floor. Now that second floor is your floor, right? Third floor is your ceiling. Support, resistance, same way. What was our support before can become a resistance and vice versa. So previously, our resistance was around $4.30. We broke it. Now it's our support. That's our accumulation zone. So you get a chance to buy 430. I would buy. And to be very honest with you, after like 3 minutes ago, I set orders at 430, 440, and 450, just in the off chance they get filled on a day of volatility. So I think you guys be smart, use technology to your advantage, and like jump in on good names. So I'm going to go to Mr. Black Mamba here. He's been very active on the stream. I like rewarding that because I appreciate when you guys show up and show up and show up. He's asking about Palantir here. And like there was recently earnings here on this stock, and we saw, I know this is a big social media one. A lot of people are believers. We've covered the shit out of this. You know, nobody really liked that price action post earnings. But again, let's just kind of case in point. We talked about volume earlier. So I'll let you guys tell me, what are you thinking here? We just talked about volume. What do you think? Looking at what was just drawn for you there.
Wait, that's so funny to resist. So I added Palantir today for the first time in 10 months. My cost basis was below 10. I added
Stocks, but he would agree you added right off support. So smart.
Yeah, that's exactly where I at. That's so funny you did that. I didn't even use this tool when I did that. I tracked it a week ago. Palantir, what happened? This is a perfect example of what's happening like this earnings cycle for growth tech, where clients or customers are entertaining AI, where it's not yet seeing in the top line yet. There's dabbling their toes, playing with the projects, not really seeing the true ROI yet. It's for sure. I can say this statement 100% going to happen, where you're going to see that inflection on the top line. Just my 10 years in corporate strategy, I know exactly what's happening, where they offer these beta phases of like, try this new product, AI product, see how it can utilize for your own data sets or products, play around with it before you really start going at it full on. That's what's happening right now. And Palantir had an explosive commercial client growth. They just didn't really see on the top line as much. And that's why a lot of people were expecting for them to like show the real acceleration from like 20% to like maybe 23, 24. We didn't see that right now. The current valuation, the mid 20s, it had to have like a 24 to 25% top line growth for 2024. And it raised it to 21%. So that alone, I was like, all right, I can see a 15% decline happen based on what I was underwriting 25%. It came at 21%, 22%. So I was like, all right, it probably goes down 15%. Guess what? It went down 20%. I was like, all right, I'm adding, because what I know about Palantir is when you use that product, you're not leaving at all. Like there's zero churn. And if they're having an explosive growth in the commercial front, they're going to eventually spend. Like they're going to. History has proven it for Palantir's product, and it's going to happen in the future. And why would I not add right now when I clearly see people are the boot camps are working, they're accepting the product, they're eventually going to hit the top line. Knowing that, I'm like, all right, I'll front run it before they validated some quarter next quarter, the quarter after that. And when that happens, the stock will be at $30 already. And I want to add it at 20 for that 50% juice, because the one metric that matters was that commercial client growth. And it got validated after the 70% explosive growth previous quarter. We got 45% this upcoming quarter. I'm like, all right, that's insane. I expected some kind of drop off because 70% is wild on the commercial front.
Right.
We didn't see that. So I added.
Okay. So one more, I guess, question before we get into one last earnings, because I know you got to cut out a little early. Do you know what one of the fundamental things that, I guess, the initial rounds of money that came into Uber, right? do you remember? I don't know if you there's a documentary about it. They were very public about this after. What the one metric that most of the early round investors cared about as far as what they thought would dictate the growth of the company? Do you know what it was? I don't know if you didn't see it. It was, I'll just tell you, user stickiness. That was the singular most attractive thing about Uber in the beginning, is when they got the data on how sticky the service was. You ride once, you never stop. I hate Uber, still use it.
Yeah. I mean, what, you're going to drink and drive or order a taxi? No, you're going to use an Uber or Lyft. So that's the stickiness.
Right. So keep that in mind when you look at stuff like this. Again, infinitely more scalable because software suite, product, service. Come on, it's just stupid. So really quick, let's dive in. Your main squeeze here. You sold a lot of people. I got a lot of questions about this last week after you were talking about it when we were on live Monday.
Ocean. What's it up right now? Is it up 7% today?
So today is having a strong day. Very strong day, and looking at
9%. It's bucking the trend too. Like risk on is fading hard today. Everything's red 2-3%. This is up 9%. So,
and look at where it sits. So when we were live, right, from the technical side, again, I think that's why this is the one stream you need to watch.
We can't see a chart. Are you showing a chart?
Jesus Christ, not bad. So as you can see here, thank you. Last week, again, Shy walked you through the fundamentals. I walked you through the technicals. Those win-win on pretty much every trade that we've both been in agreement upon those two items. 35.30 was the price to beat. That was, hey, breakout. We pay attention right now. Look where it's trading today. Personally, I will wait for the close because I just want to make sure that strength can be sustained. But if we go dive and look a little more granularly, it looks like we're going to see continuation through end of day. Just first look. Volume has remained strong. It's actually picked up quite a bit. So again, we talked about range trading, how simple of a strategy it is. You find a good name, you isolate the range, you trade bottom to top, top to bottom. You can wash, rinse, repeat the same trades and make a ton of money. This one, bottom 24 to 35, breakout over 35, yields a pretty significant upside here. And I'll let him have closing thoughts before he goes. I would say $39 is on the horizon, and then we're going to test these highs. Yeah, and then clean this gap out to 46, because come on.
Yeah, I think I communicated last week. I have a $75 target on DigitalOcean by 2026. I'm underwriting significant reacceleration in the top line, and we're not seeing as much this recent print. However, there's one metric that I called out. I was like, nobody's really counting them as an infrastructure player because they made this amazing acquisition on Paperspace, which is the GPU infrastructure, like 2 years ago or a year ago. I was like, holy shit, they stole that company for what they paid for. I was thinking $150 million a year and a half ago, or $200 million before this massive craze over AI and infrastructure. Like, that's a steal. That's the Instagram to Meta acquisition of like transformative nature of Meta. It's like, that's what it was for DigitalOcean, because they always had that pure cloud computing elements of SMBs. But if you're an SMB, like, perfect example, if you guys watch Silicon Valley, Pied Piper is like the type of SMBs I'm talking about, where they can't afford to go to the Azure, AWS within their Series A funding of like, it's too expensive for them. They go to the DigitalOcean, which is primarily focused on the SMBs on the cheaper costs. And the big dogs don't give a F about these smaller players because it doesn't move the line for them. The thesis on DigitalOcean is, once you're part of DigitalOcean's like cloud computing, which is 10 million developers use it right now, as they get bigger, they're going to stay most likely. And the one metric I want to call out, that I mentioned, the GPU infrastructure, they called out that GPU-based infrastructure as a service was up 67% month over month.
Which is psychotic.
That's absurd. And that just, I know, I called it. I was like, wow, the infrastructure players are on fire and the top dogs. I think DigitalOcean is going to be a little lagging because SMBs, that's the way of the business. They're always the laggers. I think it's going to start picking up in the second half of this year. And I want to see some kind of big push towards that thesis. That's 67% from March to April. That's massive. And that alone was like, that gave me the green light.
Agreed. So that's a buy for you at this stage.
Oh,
I mean,
I'm trying to add as much as possible in the coming weeks. Like they have 20% free cash flow margins. They're supposed to grow in the mid-teens this year. I think we're going to get 30% growth by 2026. Like that's kind of massive reacceleration I'm underwriting. And if that's the case, that $75 is no brainer. I think it's going to be triple digits. I just see what's happening on the big tech side of like the reacceleration at that scale, which has never been seen before. It's a high tide raises all boats type of situation where it's eventually going to trickle down to SMBs. And you're going to see that kind of explosive growth where they're showing 30% at that scale. There's no reason these SMBs wouldn't be hitting that same kind of mark in a year or two, because that's just the way it goes from like the high enterprise players to SMBs. Like they just follow suit. It just takes a lot longer.
Yeah. And to validate everything he's saying, I mean, huge beat on earnings. As we always take these long-term option swings, we want to trade for the earnings growth. We want to shoot for a target of at least 2 to 3 quarters out. And when we have a beat like this, all we need to see is a match or slight beat, which they've got 2 consecutive quarters of a beat. And they matched beat. If we see even nominally positive earnings here, this stock has easy 30 to 50% upside over the next 2 quarters, I would say, from a technical perspective. Take it for what it's worth. I think it's sitting there on the table, given, we don't get like macro explosion, United States goes to war, blah, 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 blah. But yeah.
No, I mean, I agree. And one last comment I want to make before hopping off, because I got to jump off a little early today. It's so easy for people to talk Mag 7 all day. Those are the sort of safe money. Like, yes,
Yep.
Azure, you could probably make a ton of money on Microsoft, Metas, the Amazons, the Googles. But Austin and I have an edge where we're trying to find those SMID companies. What's a SMID company? Small, medium cap companies who are going to be those massive winners on these secular growth themes. And it's not easy. You guys know there's so many duds out there within the market caps of 500 million to 25 billion. There's a ton of duds in there. There's so thousands of companies in that range I just called out. But I do a shit ton of research every single day for years to find those hidden gems. And Oz backs it up with the charts, the volume, the where's it going to go next. Like this combination is very rare to see out there, where we're sticking our necks out by calling these micro specific names that we think are going to be massive winners. Like Jumia at $3, everyone was laughing at me because they're like, you're just throw your money in the fire.
You're a penny stock guy, huh?
Yeah, penny stock. Oh, you can't trust them. Transmedics. Oh my God, it's less than $1 billion. What are you doing? It's just an organ transplant. Like it's essentially an ice bucket. You're investing in a company that's an ice bucket. Palantir. It's a black box consulting company that the government uses. Like it's not going to be commercially viable. DigitalOcean. Why would you bet against Azure, AWS? Like this is a small guppy of a cloud computing company. It's because we have an angle and we see something that the mass doesn't see yet. And the key is to be the first mover, because that's when the real alpha is generated. And when it's something like this, DigitalOcean turns from 30 to 50. If it consolidates in 50, I could care less because we doubled our money within like a year, and it's just going to base out until it has the next leg. And that's kind of how investing works, where if the thesis gets broken, I'm bouncing real quick. I'm not going to be a bag holder. But until they prove otherwise, I have my conviction. I've done my hours, and Oz backs it up on what the stop loss should be and what the chart's going to be. We're essentially handing this to everyone on a plate. And it's like, I wish I had this kind of service when I originally started a couple years ago, because I had a lot of head fakes on my investments because I was just learning as I was doing the work. Didn't really have the guidance as like what Austin and I are doing twice a week for everyone. So keep that in mind. Like I'm very jealous of all you guys because I wish this existed a couple years ago. But again, this is me. I went through that pain back then, so I can like teach it to everyone right now that you guys don't have to lose money in order to learn along the way. But I gotta hop off. Oz, thanks for having me on. Thanks for having me, everyone. Tune in on Monday.
Monday, we'll see you back. Later, buddy.
Peace.
All right, so we're not done yet. We got about 15 more minutes just to kind of dive a little deeper in this trade. If you want my exact trade details, those are being posted in the Discord as we speak, so make sure you get in there. Links at the bottom to get that. I am liking this one here, and I think I am going to initiate a trade here. So as we wrap, we're going to go into the SPY final thoughts. Again, as we said earlier, I'd be suspicious here. I would not be extremely confident. I don't think that the confidence is in the market. 524 is the price to beat. So if you're a SPY trader and you want to go long and you would take I'd say a decent term long position, I would go break of 524, aim for 540. If we get that break on volume, I think that that's probably where we're going to head. Should we not? I don't think if we can't sustain above 520, I think you should be careful. I think we're going to be range bound. I mean, I agree with Shai's trade that I wouldn't initiate it yet, but I do like it. We break 518 and we start seeing below 515. I think 480 is absolutely on the table. There's a lot of gap space to fill here to the downside. So please keep that in mind when you're trading. If you're trading intraday, here's your ranges: 520 to 524. We open strong over 520, calls to 524. It's an easy trade, 3 weeks out in expiration. You'll nail it every time. But what I want to do is we've been extremely successful in identifying these passive options, passive income options, bull put spreads. I found one here that I don't hate. I guess the chart it's flipping back and forth. So we really need to see a stronger close on Google. So maybe we're going to table that one for now. Yeah, that weekly's not giving me a lot of confidence. So let me look again. Let's take Amazon. So what I like is that Google is bucking the trend, and they're down 0.6% today relative to a lot of other names that are down a bit more. Even though the SPY is up technically 0.2%, I think that there is a little bit of uncertainty here, and I want to make sure we're placing our bet in the best possible place. So Amazon, the weekly hasn't turned over. On the daily, does have strength. I do like that we're seeing a little more horizontal consolidation. I do like that we did see buying come in yesterday. That was quite strong. I think we're getting these EMAs fanning up. We obviously rejected 166 too low, and now we have a much more, I would say, consistent trend that I feel a lot more confident in taking this trade on. So I'm going to post this again. Join the Discord to get in there. I am liking this right here. I'm going to post this for you guys right in here. I think this is our bull put spread here on Amazon. It's going to be the 524 expiration. Be able to execute this right before close. So that's the buy. I'm going to post this here for you guys. 185 put. I think we're going to capture at least, I think that's going to be our target ROI. I think we'll be closer to 30% net return. So that is a bull put spread. I'll post this for you guys in here in the Discord. Give you a little incentive to join if you're not in it yet. Posting trades daily just for you guys. Make some money, baby. All right. And if you don't have a coach and you don't have a strategy, it's the number one place to go. Teach you each strategy with a coach. You get the one-on-one time. You get everything you can need. And for those of you that love the in-person stuff, do not forget, we almost have closed all the spots. I'm very excited. The 2024 Traders Paradise, baby. 2 beautiful red days in Delray Beach. For the first time ever, you're going to get access to my exclusive screener. I've never given this to anyone. It is how I built my money. To be honest, my small cap screener is explosive. It is extremely trustworthy. I've back tested over 6 years and it has been successful year over year. And that's a variety of different markets. So you will get exclusive access to that. Shai will be there, which is even more exciting. He's going to break down his strategy in depth with you live. If you want to know about that event, you have to go to the Discord. Again, I'll post the link in the comments too, and you just create a support ticket, and we'll fill you in on the info, give you everything you need to know. It is all inclusive, so keep that in mind. I couldn't be more excited, to meet a lot of you in person. We've been trading together for years, and this will be the first time we get to spend time together. I think that's really cool, but more importantly, I just can't wait for you guys to have that secret sauce, man. You guys are going to absolutely love. We're going to do a full Stocks Buddy walkthrough and setup so that you are perfectly set up to make money in any market, on any trade. We're going to give you that screener, which, again, I have never, ever released to the public, but I am just for this group of people. We have a brand new momentum trading indicator we're going to release. We'll get access to that alongside options workshops, equity trade workshops. We're going to break your mind in half with trading psychology and understanding the mind of a trader and what makes one successful and one not. We're going to help you cultivate the right plan at the right time in the right market to make it make sense for you. Trading should never, ever be something you try to fit in a box. It needs to fit in your life. You guys, like many of you are long-term investors here. That's why you're following this stream. You like getting that alpha. You like getting that growth opportunity. You like being first to the party. And obviously, I feel like that strategy is probably the most applicable to most people. But here's the thing. You will get all these fucking gurus and all this bullshit telling you all these like high volatility day trades are going to make you rich overnight. Like if you want to do this and you want to build wealth and you want to be a rich person for the rest of your life, that is probably not going to move the needle for you on the whole. What will, though, is a very simple and wise, pragmatic approach to the market that fits with your life. If you have kids and you have a job, you have far less time than a lot of other people. If you're in college and let's say you have 6 hours a day to dedicate to this, you can stare at your screen and day trading might make sense. It all depends on how your lifestyle exists and that you can fit your thesis, your philosophy, your methodology of investing and trading into your life, not the other way around. Because if you can't justify the time commitments of the strategy you're using, then you're setting yourself up for a loss. And that's like the number one thing I hate to see. The AMC GameStop shit was heartbreaking to watch. People losing like family fortunes, people losing mortgage payment worth of money. Please do not fall into that camp. You do not have to do that stuff. You do not have to just blindly follow social media. You need a strategy. You need a coach. You need in-depth work. Give yourself a year to do this the right way with the right people, and you will be extremely good at this. Extremely good. Again, you guys have watched my account. You watched me turn 30. I started with 30,000, went to 100, took the money out. Started with 50,000, went to 150, took the money out. Started with 50,000 again. I'm already up at like 130,000 again. You've watched me do this year after year. What we teach is my overall strategy. It's 4 components. You learn the trading psychology, the technical mastery component, like how to read a chart, how do I break it down, how do I understand it. You learn the swing trading component, essential in both options and equities. You learn the passive options income, which I would account this year for like probably 30% of that return. And then you learn the day trading stuff. So you can be a sniper and you can master this stuff. And if you want to just like all in, get started, again, join the Discord. The link's at the bottom. That's how you get access to the event. It is going to be in sunny Florida, mid-July. I hope you guys join. I hope you can meet us there. Again, I will be there. Shai will be there. Ben will be there. Lee, all of our analysts, everyone's going to be there. It's going to be a party. It's going to be fun. And most importantly, I think you're going to walk away with a life-changing experience in both from an emotional standpoint, as well as your trading capacity. I mean, you'll also leave with some unbelievable new tools. It's kind of like walking away with a fancy new car because that screener alone, if you're even trading with $1,000, you should be walking away with a couple $100 a week in profit just using that. So again, to wrap it up, if you want those passive options trades, I just posted it in the Discord. We went on the Amazon bull put spread. If you want all the details, link is right there in the comments. Feel free to join. Tons of free stuff, free resources, free education. Everything you could want, guys, is all for you in one place. I tried this for years, trying to find good information and the right information. Kept running into like one guy I'd really like, and then I'd find another guy I'd like, and they're both right, but they conflict with each other, right? It wasn't a coherent system that could teach me how to actually do this. I don't want people dependent on me for trades. I want them to come to me because I'm going to do the research, and then they execute the strategy because they understand it. It makes sense, and it's profitable. So again, me and Shai are here twice a week, every week. We do the research for you. We give it to you. I just want to see you guys win. At the end of the day, high tide raises all boats. The better you are, the better market we're in. More opportunity to make money when everybody's on the same team. So I appreciate you guys. I appreciate you showing up for the stream. We appreciate all the shares, all the comments, all the likes. I appreciate you to follow the YouTube channel. It's huge. Follow the Twitter accounts. You guys are the best. We have a phenomenal community here, and I couldn't love you guys more. I think that we really have something special, and I love doing this with you guys. It's been a blast. So I'll see you guys Monday, 5 p.m. Eastern. Twitter, Discord, YouTube. Join us there, and we will break down the SPY, give you 2 options trades for the week, which is basically the bull and the bear case. So if you're a day trading SPY master, this is where you get that alpha for the week. So you know exactly how to trade each move and the exact contract details of what to trade, down to the strike, the expiration, everything. I break down the levels to show you where I'm going long and where I'm going short. Then we walk through some of the bigger names that we've been following for a while. And then, as always, our favorite segment, Smash or Pass. You guys give me the tickers to cover. I walk through them with you, and you guys get to basically get us to analyze the charts for you on anything you're unsure of. So that way you can be confident in your trades and your investments, what have you. And yeah, so I love you guys. And we did do a free trial on Stocks Buddy. So if you haven't gotten it yet, shoot me a DM either on Twitter or join the Discord, and I'll send you the link so you can try it out for 5 days for free. Love y'all. Stay blessed. Bye-bye.